All right, today we're going to tear into VMAR, a stock whose chart is telling a pretty dramatic story. We're going to break down all the technical signals, piece by piece, so we can get a handle on what is driving this stock's wild movement. Let's jump right in. Okay, let's not bury the lead here. Right off the bat, here's the final score from the analysis on the stock's technical health, 5.41. Now, a number like that just hanging in the air, it doesn't mean much, right? Is that good? Is that bad? What are we supposed to do with that? Well, let's give it some context. There you have it. That 5.41 score translates to a strong bearish rating. So the bottom line is, the technicals are painting a really negative picture here. For the rest of this breakdown, we're going to unpack exactly why the analysis landed on this conclusion. Okay, first things first. You've got to start with the most powerful force in technical analysis, and that's the trend. Is the stock going up, down, or just sideways? With VMAR, let me tell you, the picture couldn't be clearer. Wow, yeah, this slide really says it all, doesn't it? Just look at the difference. The stock's average price over the last 200 days was over $5.50. Its current price, around 47 cents. The visual tells the whole story. This is not a dip, this is a cliff, a massive long-term decline. So we know the trend is down, but the next question is how strong is that downtrend? Is the engine just idling, or is the pedal to the metal? To figure that out, analysts use a tool called the ADX. It's the perfect way to measure the horsepower behind a trend. And here is our answer, 57.81. Now, to put that in perspective, any ADX reading over 25 is considered a strong trend. Anything over 50 is considered extremely strong. So yeah, that bearish engine we were talking about, it's running at full throttle. Okay, so the big picture is a powerful downtrend. But what about the here and now? What's happening on a shorter time frame? In this next section, we're going to look at the forces, the momentum that are actively pushing this price down. This is the RSI, the Relative Strength Index. And you can see VMARS is way down at 23.59, deep inside what traders call the oversold zone. Now, sometimes when you hear oversold, you might think, oh great, it's due for a bounce. But not so fast. When a downtrend is this powerful, being this oversold often just confirms how incredibly intense the selling pressure is. The sellers are firmly in control. Next, let's check the MACD, another key momentum indicator. And it's telling the exact same story. The simple takeaway here is that both lines are negative, and the faster MACD line is actually pulling away from the slower signal line. It's like it's accelerating to the downside. The negative momentum isn't just there, it's getting stronger. And just to really hammer the point home on momentum, check out the Stochastic Oscillator. It's at 0.00. It literally cannot go any lower. This thing is completely pinned to the floor by sellers. Absolutely exhausted. So let's recap where we are. The long-term trend is viciously down, and the short-term momentum is completely crushed. So now let's see where the price is actually sitting at this very moment and how volatile things are. A good way to think of Bollinger Bands is like the normal lanes of traffic on a highway. Most of the time, a stock's price stays within them. Well, VMAR isn't just in the slow lane, it's completely off the road, trading outside the lower band. That's a huge red flag. It suggests the selling has become extreme and highly volatile. And if that wasn't clear enough, take a look at this. This chart shows us where the current price is relative to its high and low for the entire past year. And you can barely even see it. That tiny little sliver, that's where we are. It is trading at the absolute bottom of its 52-week range, just a crystal clear sign of weakness. But here's the key question. Is there any real money behind these moves? Well, the trading volume has been high, which tells us that sellers are acting with conviction. But more than that, indicators that track the actual flow of money, like on-balance volume and the MFI, both confirm that capital is actively fleeing the stock. It's not just drifting lower, it's being pushed down hard. Okay, so we've looked at this from pretty much every angle. The trend, the momentum, the key levels, the volume. Now, it's time to connect all these dots and see what the final picture looks like. So here's the summary. Let's run down the checklist. Trend, an extremely strong, confirmed downtrend. Check. Momentum, absolutely crushed, deeply negative across multiple indicators. Check. Volume, confirms heavy selling pressure with money heading for the exits. Check. And its position, at the rock bottom of its yearly range. Every single signal is aligned and pointing in the same direction. And all of that technical evidence leads to this final verdict from the analysis. The stock is considered suitable only for high-risk speculators. That is about as stark a warning as you can get in the world of financial analysis. And so this leaves us with one final crucial question. Look, the stock is obviously extremely beaten down. A relief bounce could happen at any time. But given the overwhelming weight of all the evidence we've just seen, you have to ask yourself, would that bounce be the start of a real recovery? Or would it just be a trap for hopeful buyers? Based on this analysis, that seems to be the key risk to consider.